All right, today we're talking about Merck, one of the true giants in the pharmaceutical world. But this giant is facing a challenge so huge, it's going to define its entire next decade. It's a high-stakes, high-pressure race against time, and we're going to break down their exact game plan.
So, to really get what Merck is up against, you have to wrap your head around this number, $31.7 billion. That is the unbelievable amount of money their blockbuster cancer drug, Keytruda, pulled in a single year. It is the undisputed king of their entire portfolio. But, relying on one king is a risky game, especially when you know their reign has a definite end date.
And this is where the plot thickens. It's all about something called the patent cliff. Sometime around 2028, the patents that protect Keytruda are going to expire. The second that happens, cheaper generic versions can flood the market, and that massive revenue stream, that $30 billion a year gusher, could slow to a trickle almost overnight. So that's the big multi-billion-dollar question on everyone's mind, from Wall Street traders to the execs inside Merck's own boardroom. How in the world do you replace a drug that big? Well, they do have a plan, a really ambitious one, and we're about to dive right into it.
Okay, so before we look at the future, let's get a handle on where they are right now. We'll start with their latest report card, the fourth quarter results from 2025.
So the big headline number here is EPS, or earnings per share, which is basically a key scorecard for a company's profit. The experts on Wall Street were expecting $2.08. Merck delivered $2.04. Now, it's a small miss, for sure, but it shows that the company is already dealing with some tricky currents, even before the real storm of the patent cliff hits. But, a single number never tells the whole story. When you look under the hood, it's really a tale of two portfolios. On one side, you've got the winners. Keytruda is amazingly still growing, and a newer drug, Winrevair, had a fantastic quarter. But then you look at the other side, and a drug like Gardasil, their HPV vaccine, saw sales fall off a cliff, down 35%, because of weaker demand in places like China and Japan. It really shows that while Keytruda is the star player, some of the supporting cast is struggling.
So how is Merck going to climb this mountain? Well, the first part of their strategy is all about what they're building in-house. Let's take a look at their massive internal drug pipeline.
And this is the big, flashy number Merck wants everyone to focus on: $70 billion. That's what they think their drugs in development now could be worth in sales by the mid-2030s. I mean, to put that into perspective, that's more than double what Keytruda is expected to make at its absolute peak. So they're not just trying to find one replacement. They're trying to build a whole new empire of blockbusters. So what are these potential new superstars? Well, first up, you've got Enlicitide. This is a pill taken once a day to lower bad cholesterol. Now, in a world where so many treatments are injections, a simple pill for one of the most common health problems on the planet, that could be absolutely huge. Then there is this other really cool one, MK1406. This isn't a treatment for the flu. It's designed to prevent it with a long-acting shot. Just think about that. For people at high risk, like the elderly, a single shot that could protect them for a whole season will be a complete and total game changer. And believe me, the list just keeps going. You can see from these other examples, they're not putting all their eggs in one basket. They're making bets in HIV, eye diseases, autoimmune disorders, and new types of cancer treatments. The goal here is crystal clear. Build a portfolio so diverse and so strong that no single patent cliff can ever put the company in this position again. But building a whole new empire from the ground up takes time, and time is something Merck doesn't have a lot of. So that brings us to part 2 of the plan. If you can't build it fast enough, you buy it. Yep, Merck is taking that mountain of cash that Keytruda is generating, and they're going on a serious shopping spree. They're out there actively hunting for smaller companies and promising drugs they can snatch up and plug right into their own pipeline. They're literally buying their future revenue.
And this isn't just talk. You can see it happening right now. In 2025, they snapped up Verona Pharma to get stronger in respiratory diseases. And hey, remember that awesome flu preventative MK1406 we just talked about? That came directly from their acquisition of Cidara Therapeutics. So the key takeaway here is that they are actively spending billions to hit fast forward on their post-Keytruda future.
Okay, so this all sounds great, right? A huge pipeline, smart acquisitions, but it's not all sunshine and roses. This plan comes with a hefty price tag, and that's creating some major headwinds for the company, especially as we look ahead to 2026. And wow, this chart right here, it really puts that short-term pain into perspective. What we're looking at is a measure of profit. After earning almost $9 a share in 2025,
Merck is forecasting just over $5 for 2026. So what gives? Why such a massive drop?
Well, it really boils down to a few key things. First, they're already getting hit by generics on some of their older drugs. But the real kicker is the cost of that shopping spree. These huge deals, like the one for CJAN, come with massive one-time accounting charges that hammer your profits in the short term. It's the classic story. They are sacrificing today's profits for what they hope will be massive growth tomorrow. All right, let's wrap this all up. What's the final verdict here? Essentially, Merck is in an all-out sprint to completely reinvent itself before its golden goose, Keytruda, finally loses its magic. Their game plan, when you boil it all down, is pretty straightforward and has three key parts. 1. Milk every last drop of profit out of Keytruda while they can. 2. Pour that cash into their giant internal pipeline of new drugs. And 3. Use that money to buy other companies to fill in the gaps and speed the whole thing up. Look, this is a bold plan. It's an incredibly expensive plan, and we can already see it hitting their profits today. Merck is literally betting the house, tens of billions of dollars, that they can build and buy a future that doesn't depend on just one miracle drug. The big question is, will this $70 billion bet actually pay off before that clock hits zero?